Japan. Thank you, Phil. The Bank of Japan boosting its economic stimulus package overnight, rocking Asian equities. Want to bring in GFI Group Chief Macro Strategist John Spallanzani to the conversation. John, good to see you. Good morning.
Great seeing you, Maria.
You think that was one of the big market stories overnight?
I think the yen strengthening was a big story last night. Nobody was really anticipating the Bank of Japan to extend the duration on JGBs to 12 years from 10 years. So that's kind of a big move, and it actually pushed down Japanese 10-year rates to 26 basis points, which is almost another historic low. Chinese 10s are now 2.90 on their way to 2.5%. 10-year bonds, are on our way to 2.5%, I think. 3% was a big level in the Chinese 10s, and that's broken. So we're down to 2.90, which is another low in that market. I think, like you said, the natural gas is wild, right? We have El Nino, we have global warming, we have nat gas at
the force awakening.
Exactly. Nat gas at $1.74 is like oil at 20, right? So really under 20. So that's a huge stimulus. Does that affect FANG? I don't think so, right? So the FANG stocks, Facebook, Amazon, Netflix, and Google, right?
And Google.
If you're in anything else but FANG technology, right, you're pretty good. But if you're in oil, gas, mining, that's going to be a problem next year, because I think that commodities continue to go lower. You have China, continuing to go from, a manufacturing economy to a service economy. So that's going to continue to put downward pressure on prices. You look at iron ore, you look at rubber, you look at all the things that they've been using for a long time. Those are, those are in depression-like states.
Right.
So but that's a positive for us, right?
Why is that a positive for you? Oh, because
that's
in other words,
for our
it's
economy,
cheaper.
right? Exactly.
Cheaper.
Well,
We've been saying
cheaper inputs.
John, we've been trying to educate people on this throughout the year, and the link between lower bond yields and deflation, corporate profits. Again, it may be good for us, corn prices are lower, but for the farmer selling the corn in Nebraska or Iowa, that's a train wreck. So we have this situation now that's developing where, like you said, Japanese government bond yields are 0.26%. How do you think about that relative to the Fed rate hike and where U.S. rates are on the 10-year, for example?
Well, I think that it's very hard where we have this global yield curve, right? It's not a U.S. yield curve anymore. If everybody is doing QE, is anybody doing QE, is what I like to say.
That's a good line.
We have this yield curve compression going around globally.
Yeah.
So that's why our rates really, our rates are prices rallying, yields went lower, right? We were above 3% in the 30s for like a half a second, and then right away we're back down to 2.90. So again, there's not a lot of quality paper out there. If you're getting 55 basis points in Germany and 26 basis points in Japan, 300 basis points in the United States looks like a bargain, right?
Exactly.
What we should be doing is extending duration here. We should go from 30-year paper out to 50-year paper.
Which they talked about, actually,
Which is
John.
what they talked about, exactly.
Douglas Holtaken has talked about on air. They actually talked about it and then put it to the side, in fact, they should have done
how about 50-year paper to do infrastructure? That's a great, that's a layup, right? Larry Summers has been talking about that. I've talked about it. Many people have talked about it, but why not, right?
Is the window still open for that, you think?
I'm sorry?
Is the window still open for the government to do that?
I think it's too dysfunctional. I think you're so right, but it could. I just don't think it can happen under this.
The other positive that we have this morning is we got 25 basis points increase, but we got a $1 trillion budget bill. So what would you rather have? Increase of 25 basis points and $1 trillion. I take the $1 trillion and give, do another 25 basis points and give us another trillion. That's what we need, right? Because everything is really locked up.
To be clear, your point that you're making is you would rather have fiscal stimulus than monetary stimulus. Have Congress
and that's been the debate for a long time.
We'll do that trade all day, right?
Well, the Federal Reserve has been lowering interest rates for the last couple of years. People have been saying, well, what does this mean in terms of fiscal policy? We haven't seen any.
Yeah.
What kind of fiscal policy are you talking about?
Well, we have the budget deal. So, that's what I'm talking about, infrastructure, right? You have Biden going to LaGuardia. This is a third world country. We're going to knock the whole thing down. There's so many projects that can be done, and the rates are so low, so why not get them done? What's going to be the handoff that we're going to have from energy, which was the driving in jobs, right, for the last 5 years, the natural gas, Dakota, the Balkans, that was where all the jobs were being created.
Yeah.
They weren't being created in housing. They weren't being created in finance. They were being
I totally agree.
So what's going to be, as Mohammed El-Arian says, the baton has to be passed to something and someone.
Maybe it's tech. Maybe it's tech.
But it doesn't
always
have, like to take to take a free market capitalist perspective on this, it doesn't always have to be passed to the government. So what we're always asking for is monetary policy or fiscal policy. One policy is just to get the heck out of the way, and cut taxes and let capitalists. You give me $1, I can guarantee I can do more with it than Larry Summers can do with $1. And that's really important. I think that we need to make that step and not just ask for handouts. The Japanese, again, it's 3.5 trillion yen in stimulus. What's a yen anymore? They have 90 trillion in monetary policy annually. 90 trillion yens. It doesn't mean anything. It ended in nothing.
I tweeted out last night, right? If we have driverless cars and no roads, what do we have? Nothing, right? So we need to have Mark Andreessen, Elon Musk, all these guys take the big data, go to Washington, right, and compress all the trillions of dollars that we're wasting, right? That we need to revamp Washington. We need Silicon Valley in Washington. And whether Carly Fiorini, she's right? We need to revamp that whole system. It's so antiquated. It's so bad that we can't track people.
How about the crazy idea that people who use the roads actually paying for their repair? Federal government, gas taxes, you talk about raising gas taxes and people lose their minds, whether they're Republican or Democrat. That's why it hasn't moved in 20 some odd years.
Absolutely right. 100%.
People don't, they think they pay for them, but they don't pay for them.
Yeah.
We all pay for it through our income taxes.
Yeah.
We don't get usage taxes.
People who actually don't drive that much are helping pay for the infrastructure spending.
There's one more issue in infrastructure, and it's security. The electrical grid scares me a lot. That is a huge vulnerability. Now would be the time to bring that up to the 21st
That's why everybody's buying generators, right? Because everybody wants to go off-grid. People want to go solar, right? I mean, why do we have telephone poles and over-the-ground power lines from the 1930s? I mean, there's so many projects that could be done.
Does the new president change this?
Well, right now, we have hard left, hard right. Yeah. And we need somebody who could bring those two sides together. And right now, I don't know if we have a candidate
Who's your guy? Who's your guy or gal?
I don't have a guy or gal.
All right,
hey, Super Tuesday, I'll have somebody.
John Spallanzani, good to see you.
Good seeing you.
Thank you so much, John.